Welcome, everyone. Today, we're diving into the recent decision by the SEC that sparked some serious buzz in the Bitcoin ETF world.
Absolutely, it's pretty incredible. Can you break down what happened exactly?
Sure thing. So, the SEC bumped the options contract limit for Bitcoin ETFs from 25,000 to a whopping 250,000. This change applies to all
Yeah.
ETFs offering options, which means BlackRock's Bitcoin ETF, among others like IBIT, sees a big boost.
Wow, a tenfold increase. That's huge. So what does this really do for the market?
Well, it essentially gives these funds more flexibility to implement aggressive option strategies like covered call selling. That strategy can, in a way, cushion against downside risk while still letting you capture some upside, even though it might cap your gains a bit.
Mm-hmm. Interesting. But don't you think that might also limit the potential profit for investors?
That's a fair point. While it does limit the upside a little, the overall effect could be a more stable market environment with lower volatility. Reduced volatility might even attract new institutional capital who otherwise find Bitcoin too erratic for risk parity purposes.
Right. And I got it that NYDIG's Greg Cipollaro mentioned that IBIT already has a monstrous lead over others, right?
Exactly. IBIT, representing assets of about $85.5 billion, is leading big time compared to FBTC at around $21.35 billion. With these new options limits, IBIT's edge is only expected to widen.
Yep. So essentially, the SEC's decision seems to favor the market leaders, giving them even more prominence.
Yes, that appears to be the case. It's kind of like giving the leading runner a head start in a race, wouldn't you
Yeah,
say?
indeed. But what about the traders? How will their strategies change with this new limit?
Good question. With the expanded options capacity, traders are likely to employ more creative option strategies. For example, they can sell covered calls more aggressively, which means they're, like, using the ETF as a way to hedge bets and manage risks more smartly.
Mm-hmm. It almost sounds like this move is going to tame Bitcoin's wild volatility a bit, isn't it?
Absolutely. The idea is that by enabling these more active option strategies, the market could see a reduction in price swings, making Bitcoin more appealing to those traditional investors who demand a smoother ride.
Right, exactly. And speaking of investors, there was also a note about in-kind creation and redemption now being approved by the SEC. How does that fit in?
Yes, that's another big change. In-kind creation and redemption allow authorized participants to exchange ETF shares for the actual underlying asset, in this case, Bitcoin, and vice versa, instead of settling in cash.
Mm-hmm.
It's a neat mechanism that can boost liquidity and streamline the whole ETF process.
So, in essence, it should enhance market efficiency and investor access.
Exactly. But here's where it gets interesting. Only a few APs, like Jane Street and Virtue, currently have the crypto capabilities to take full advantage of these arbitrage opportunities.
Right, that's a potential bottleneck. Do you think that might force other broker-dealers to either upgrade or team up with crypto-friendly partners?
That seems likely. For those brokers without native crypto trading capacities, partnering or even acquiring crypto capabilities may become inevitable if they want to remain competitive.
Yeah, makes sense. Now, I have a slight challenge for you. How do we reconcile the potential risk of concentrating advantage in the already strong players like IBIT with broader market growth?
Great question. While it's true that IBIT's lead could widen, that very lead can also provide a stable base for further overall market growth. In other words, as the market leaders get even more efficient, their stability may, in turn, reduce overall market volatility, which benefits even the smaller players.
Yeah, I can see that. But isn't there a risk that this could lead to a lack of competition, dampening innovation in the ETF space?
That's a valid concern. However, market dynamics suggest that competitive pressures are still there, as new entrants and innovations often arise precisely because dominant players set high standards. And, as strategies evolve, you might see nimble players catching up with
Absolutely.
creative offerings.
Sounds like a delicate balance then, boosting stability without stifling competition.
Exactly, it's a balancing act. Plus, the reduced volatility through aggressive option strategies, like covered calls, may drive more spot buying. Cipollaro noted that this feedback loop, lower volatility leading to increased spot demand, could become a powerful driver of sustained market demand.
That's pretty fascinating. So, Broader institutional interest might actually be reignited by these changes?
Right, as Bitcoin becomes less crazy volatile, institutional investors might find it more attractive as a balanced risk asset. It's like um, adding a solid foundation to what was once a roller coaster ride.
Exactly, yeah. And I guess this also means that BlackRock's ETF will have an even monstrous lead because of these structural changes, right?
Absolutely. BlackRock's ETF is positioned to be the market leader, and with the SEC's new rules, especially the expanded options limits, it's set to capture even more market share.
Yep, definitely. It really is a game changer. But let's not forget potential pitfalls. Do you see any challenges on the horizon for these ETFs?
Oh, for sure. While the advantages are clear, challenges remain, like the limited number of authorized participants with crypto trading abilities, which could lead to temporary inefficiencies or pricing issues. Also, there's always the regulatory uncertainty lingering over crypto markets.
True. Right. So while these changes can drive stability and growth, they also put a spotlight on the need for more broad-based crypto expertise within traditional financial institutions.
Exactly, it's like a call to modernize. The industry may need to evolve quickly to harness these new opportunities or risk being left behind.
Yeah, absolutely. And that evolution might even spur more innovation in risk management and trading strategies across the board, right?
Yes, definitely. When established players push the envelope on one front, it encourages others to either innovate or partner up to remain competitive.
That's the way forward. So, in summary, the SEC's decision is not just a regulatory update, it's a catalyst for potential market restructuring and a boost for both traders and institutional investors.
Precisely. It's a transformative moment for Bitcoin ETFs, shaping everything from volatility control to market access. It'll be exciting to see how this plays out in the coming months.
Yeah, I'm definitely excited. And that's the wrap for today's discussion, folks.